Good morning. We cover whether or not you should use your personal credit card for your business as a sole proprietor, and the answer is yes, and we covered that in one of our videos. Now we'd like to talk about where should you report your credit card interest that you pay during the year on your Schedule C. There is multiple areas that you will report that expense. If you are not paying your credit card in full, first you need to keep that credit card, your personal credit card that you wanted to use for your business. You need to keep that just for your business and not using it for personal expenses. That's the only way you could deduct the interest paid on the card if you are not paying the balance in full every month. That's the only way you will be able to deduct that interest paid on your Schedule C. So where will you put that interest expense on your Schedule C? There is 3 areas on your Schedule C that will be possible options for that. The first one will be on under the cost of goods sold, part 3. I'll show you the Schedule C shortly. So on that area, because if you are using your credit card to buy good to resell, then your credit card is tied, your credit card interest rate is tied to your inventory. So you won't be able to deduct the interest you pay during the year if you didn't sell those goods. So that means the interest will be added to the cost of goods sold. And just keep your receipt together. So if you use your credit card to purchase product to resell, or product to manufacture or to produce a good to sell, like a handmade, or you use the credit card to source from China to if you are in a private labeling and then you have those goods to resell and you have not sold them all during the year, you won't be able to deduct the full amount you pay on your interest, the interest you expenses that you pay during the year. You won't be able to deduct that in full if you didn't sell all your goods. So that will be tied to the goods you have in inventory. So that will go under part 3, cost of goods sold, and I will suggest line 39, but we'll take a look at it to make sure we are talking about the right part. The second option would be line 16B, I believe, interest. That's a line that is mostly for mortgages interest that are not reported, or that is not reported on 1098. But you could still use that part if you use your credit card to make purchases that are fully deductible during the year. So you can put it there as well. The third option that I will suggest though would be just to scroll all the way down to part 5 or Schedule C and other expenses or other deductions, and just put interest expenses there. You can be a little bit more specific on it. But once again, that's if you make purchases in different categories of your business and you believe you should be able to deduct all the expenses, you can just put it there as well, and then that'll go in the total on line 40A and will roll back up to be on line 27A, other expenses. So let's take a look at a Schedule C here. Let's see if I can share my screen. So we have our Schedule see here, let me show you the top of the schedule. And as we scroll it down, we talk first about line 39. Let's see where our line 39 is. So our line 39 is other costs. Yeah, you can add it there, but that's part 3 cost of goods sold. So we have inventory at the beginning of the year, we have purchases. What I would suggest though is purchases less costs of items withdrawn for personal use. I mean, if you know what you are doing, you could easily add it to your purchases here, because, well, if your purchase costs you $1,000, but you put it on a credit card and you pay interest on it, and you end up paying maybe $200 in interest, pretty much your purchases didn't cost you $1,000, it cost you $1,200. So yes, you could put it on line 36 as well. Or to keep things clean, you can just come here on other costs and just add it here, that $200. So at the end, cost of goods sold. So that would pretty much be a part of your purchases or manufacturing costs during the year. And when you do your inventory to see the cost of the inventory at the end of the year, knowing inventory at the beginning of the year, the cost of manufacturing and purchases during the year, and the cost of inventory at the end of the year, you know the cost of the goods sold. So that will take into consideration the portion of the interest paid during the year if you have some inventory, you have some goods in stock. So that'll be the best option if your critical purchases are tied, the interest is tied to your goods. So the second option that I suggested would be L.L.C scene A. Let me scroll it down a little bit here. Okay, so that would be L.L.C scene A, and that's interest. So it's usually interest, but they have, I say L.L.C scene A, so they have A, they have other. So I was suggesting L.L.C scene A. In fact, is it L.L.C scene A? It will be L.L.C scene B. Sorry about that. So A is for mortgages, and B is for mortgages interest now reported on 1098. So usually that's what goes on L.L.C scene B, but you could easily put it there as well, since is the line for interest, and they have mortgage and then you have other. You could easily put it there if you believe it's fully deductible during the year, regarding of related to whatever purchases you made during that year. So you could go on line C, scene B of Schedule C. So our third option, let's go past cost of goods sold to part 5, other expenses. So you could easily put your credit card interest expense here, $200, if you are still using that example. If you use it for multiple, like in multiple categories in your business, and you wanted to deduct it fully that year, yeah, you could just put it here as well, and the total will be on line 48. Total other expenses, enter here, and on line 27A. So when you scroll up, that line 27A is in the category of expenses. I believe that will be part 2. Yeah, part 2 expenses. So that's line 27A, other expenses from line 48. So that will roll back here. So that's the third option to put your interest, your critical interest pay, if you use it to make purchases that belong to different categories of your business and you wanted to deduct that expense all by itself, not tied to the purchase, that's one way to do that as well. So yeah, and other than that, if you use it specifically for a purchase and that's just that category of purchase, you wanted to deduct it where you are going to deduct that expense, that business purchase, yeah, you could do that as well. But other than that, you have those options: cost of goods sold area, line 16B, and line 48 of part 5, and that will come back to line 27A. Thank you so much for watching our videos. I'm Afiavi Ojune Liberman, creators of Liberman Consulting LLC YouTube channel and owners of Nina's Soap, our blog, and ninassoap.com, our natural products e-commerce, and label.com, our apparel store. Thank you so much for watching our videos. Thank you all that subscribe, and we thank you very much you all that commented as well.